Looking towards 2016, what can we expect for US equities? We should expect a continuation of a positive economic backdrop that we've seen this year and the previous year. The labor market is strong, the house market continues to be strong as well, so all very positive for the consumer. So we should eventually see this long-awaited broad-based recovery for the consumer that we've been waiting for the past 2 years. For corporates, some headwinds should lift. We've seen a strong dollar in the past 2 years, and that is going to ease off. But what we might see is a bit of rising wages, so this is going to impact profitability of US corporates, so something to watch out for. Having said that, we've seen a lot of deals. These companies are cash rich. We've seen $4 trillion of deals this year so far, and we should expect a continuation of this trend into next year, and that's going to continue to support the market. We're seeing a clear dichotomy in what's happening in the market. So the service sector, the consumer-related stocks are doing quite well, versus the industrial sector struggling a bit more. On that note, looking at sector, we're still very cautious on the energy sector, and we're hoping to see some further normalization of the oil price before we increase our exposure to the sector. Financial, on the other hand, could be interesting in a rising rates environment, and here valuations are interesting. I talked about the positive of the consumer, so some consumer stock could be interesting into next year as well. You should be wary of valuations though, so be very stock specific on this, because some of these valuations are already anticipating some good news. And where we still see a lot of opportunities is the technology sector. This is going to be driven by innovation. The US is still very much the leaders in terms of innovation, and that will continue to drive M&A activity in the sector as well. So a lot of investment opportunities in technology for us.